Hello, dividend growth stock investors. It is Colby, the DGI Crab, and I wanted to talk to you really quickly today about Fastenal, stock ticker AFST. Not only is this one of the best stock tickers on the entire stock market, but this company has been on an absolute roll in 2025. And I wanted to take a moment to highlight Fastenal, do a deep dive into their recent 2-for-1 stock split and the multiple dividend increases that they have done already here in 2025. In case you are new to the channel, this is all about age-based dividend growth stock investing. I have split my emphasis of stocks here into a group of 60, and they're separated into 4 tiers based on the age and timeline of the investor, which I believe is the most important metric that any dividend growth stock investor should take into consideration. Fastenal falls into the tier 2 category of stocks, which means that I believe it is most appropriate for the 31 to 41-year-old investor. The reason for that is, generally speaking, these tier 2 stocks are going to yield somewhere in the low 2s to the mid 3s starting out, especially if you're buying them at a discount, which is what I preach here on this channel. And the expected dividend growth rate over the years can be expected to be in the high single digits. So 7 to maybe 9% is what I'm looking to get out of this group cumulatively. So, I'm not a licensed professional financial advisor, so don't take any of this as investment advice, but it's certainly worth highlighting Fastenal. Now, unfortunately, Fastenal does not fall into my category right now of currently buyable stocks. The current day yield of 2.14% is noticeably lower than the 4-year average yield of 2.44%. So I'm looking for bargains when I'm buying individual company single stocks. I want to make sure that I'm not purchasing stocks when they're yielding above the 4-year average yield, because that to me says that the stock is trading at a bit of a premium. So I'm going to be focusing more on stocks that are trading for at least 20% above their 4-year average yield, if not higher. Now, when you're doing that, you're going to be adding stocks that have some negative headlines or some short-term turmoil that they're going through. So a lot of the times when you're investing for value the way that I do, you're buying stuff that other people are generally running away from. But I have narrowed down my emphasis to very high quality companies that have shown that they can get through difficult times and have long track records of increasing their dividends year over year, even through difficult financial times. So what I want to do here for a moment is just hop on over here to Seeking Alpha, and we're going to look at a few things on Fastenal. So after the split, their shares are trading currently at $41.20. So prior to their 2-for-1 split, they were trading more in the 80s. So all they've done here is they've just doubled your share count and cut the value of the stock in half. Now, share splits, stock splits, I don't really think it's necessarily a big deal. Primarily because the overwhelming majority of brokerages that you're going to be using out there, your Robinhoods, your SoFis, many of them out there, are going to allow you to purchase fractional shares. You don't have to come up with the capital to buy a full share of a stock in order to invest. Back when that wasn't possible, stock splits were a much bigger deal. It's a lot easier to buy a stock for $100 than it is to buy one for $500. Now, Fastenal, not really one of the stocks I was expecting to see a stock split out of, because at $80 a share, it's not like that was a really large amount to begin with, even if you are the type of person who either A, isn't using a brokerage that allows fractional shares, or B, maybe you just don't like fractional shares for one reason or another, and you just want to be dealing in whole shares. Well, it did get a little bit easier down here in the 40s. It's easier than ever to buy a whole share of Fastenal. If we look at the chart here, just in terms of share price, over the last year, this stock is up 27.85%. really amazing returns out of Fastenal. If we zoom out to the 5 year, Fastenal is up just shy of 100% over the last 5 years. So certainly one that has performed really well. Now, just for now, because of where we're at here, 5 years ago to the date, we were still sort of in recovery from the COVID-19 crash. So I will check the 10-year chart just to see how it's done, even dating back 5 years prior to COVID. And you can see here over the last 10 years, this stock is up 296%. So what an amazing performer. But this channel is a lot less about share price and much more about dividends. So we're going to hop over to the dividends tab, take a quick look at the dividend scorecard, where we could see here that, like I said before, we got a 2.12% yield, an annual payout of 88 cents per share. They have a 26-year streak of increasing their dividends uninterrupted, and a 5-year dividend growth rate just shy of 12%. Really nice numbers here. Now, I will say that this particular reported payout ratio of just a shade below 80% is certainly trending high for my tastes. For the vast majority of stocks out there, with certain exceptions like real estate and BDCs, some of those higher yielding stocks that are out there, for anything that's consumer staples, consumer discretionary, even like utilities for that matter, I really prefer a payout ratio uh, somewhere between like 40 to 60%. That's a metric pretty commonly looked at by Bert and Lanny over at the Dividend Diplomats. And really, if a payout ratio even creeps up to 70%, at least in the short term, that doesn't bother me too much. But getting up here close to 80%, starting to be a little bit of a concern. Now, because Fastenal has increased their dividend not once, but twice already this year, that would indicate to me that long term, they're not concerned about being able to cover that dividend. So there is something to be said for that. But I would like to see that payout ratio get a little bit further down. We'll just kind of have to see how they do with that. But we're going to go back, take a quick look here at the dividend history. So as I said, they've done 2 dividend increases already in 2024. I beat them up a little bit back in April because they did this small dividend increase, and I totally forgot that they'd already done a much larger one in the first quarter. So as you can see here in 2024, they paid out 39 cents a share every single quarter. And then they increased that quarterly payout in the first quarter this year to 43 cents, which represented a slightly better than 10% dividend increase. And then they bumped that up to 44 cents this last quarter, adding another 2.5%, give or take, to what they'd already done. So this stock has jumped from 39 cents per quarter to 44 cents per quarter. And what we really ought to be looking at here is the adjusted amount after the stock split, because it was going to be 44 cents per share, but now it's 22 because of that 2-for-1 stock split. So we really ought to be looking over here primarily, but it's the same idea. 19.5 cents per share up to 21.5, and now up to 22. So major dividend increases here in the first half of the year. And if we go back before 2024 and just kind of review the history of what Fastenal has typically done, multiple dividend increases in a year aren't always what they do. And then sometimes you could see here, like at the end of 2023, they gave out a special dividend in addition to their 4 regularly scheduled dividends. They'll do that every now and again. 2022, pretty consistent. 2021, there was just the one increase from 21 to 22. Going back to 2020, there was just one increase, but there was, again, a special dividend at the end of 2020. So, and then if we go back to 2019, they did a stock split, as it would appear here, back in 2019 as well. So certainly a stock that is no stranger to doing stock splits. And prior to 2020, we have to go back to 2012 before we see the last special dividend prior to 2020. But still, though, being since 2012 all the way through 2024, they've done a total of 3 end-of-year special dividends. So special dividends are never something I count on or that you should count on, but man, they're great when they happen, especially when you're getting regular dividend increases from the regularly scheduled payments. So the last thing I'll look at here with you guys is just the dividend growth tab, just so we can see the numbers here at a higher level, where we can see the payout growth. Now keep in mind, it says a negative 12% increase in 2024, but that was taking the special dividend that they gave out in 2023 into account. So we're really only concerned with those normal quarterly payments. Same thing here in 2021. This wasn't a 20% decrease. It's just they did a special dividend in 2020, but not in 21. But overall, the overall increases of this stock, CGAR to 2022, double digits all the way down the board. Really nice performer, dividend aristocrat. They hit that by being in the S&P 500 and hitting that 25 consecutive year streak mark. And they certainly look primed to continue that streak into the future. So while I do believe it is a bit of an overpriced stock right now, it's a great stock to have in your portfolio. If you are holding it in your portfolio right now, I hope you've got that dividend reinvestment turned on and are continuing to at least gradually add to the position with your drip, which is exactly what I'm doing with my personal shares of Fastenal. So let me know what you guys think about this one. Are you concerned with the higher payout ratio? Do you currently own Fastenal? And finally, do you agree with my assessment that it does look a little bit overpriced, or is this one that you all are comfortable with buying at the current prices after the split? Let me know your thoughts down in the comments. Thank you for watching. Please like and subscribe to the channel. I'd really like to get that sub count up to 1,000 this year. I think with your help, we can definitely do just that. And finally, you can email me any questions you may have about investing, your personal portfolio, stock analysis, whatever it is that's on your mind. Send me over an email, dgicrab@yahoo.com. I will always respond to your question with an email. And with your permission, and if it's appropriate, I may even do a video response as well. So keep the questions coming in, you guys. And until next time, keep adding to that passive income.